In this presentation, we will pay cash on account in our not-for-profit practice problem within QuickBooks Desktop, QuickBooks Pro. Here we are in our private college practice problem. We currently have the open windows open. You can open the open windows by going to the view dropdown and selecting the open windows list. We're going to start off by going to our Excel worksheet and see what our objective will be. Here's going to be the transaction that we will have. We will be paying off accounts payable on account. Therefore, cash will be going down. We're going to be paying it off, and the accounts payable will be decreasing. So in other words, in prior transactions, we had the accounts payable go up. So we increased the payable for an expense. Typically, that would happen. We have an expense, increase the payable. Now we're going to be paying off the payable. This is going to be a straightforward transaction that we would see in any type of normal business type of transaction, whether for profit or not for profit. Let's go ahead and record this out and see what it will look like. We'll record the accounts payable first. That's the debit. So here's the accounts payable. It has $38,720 in it. That's a credit balance. We're going to say equals and scroll over to the $21,320. That will bring it down. So that brings down our balance. Then we're going to go up to cash. We're going to post the second component of it, and we're going to go up to cash to do that. We will say equals, scroll over to the credit, and that's going to be decreasing the cash. And that'll put us back in balance down below. Notice there's no effect on the income statement accounts, no effect on net income, because we're basically just paying off the payable, which is a liability, with cash, which is an asset. Now, when we go into QuickBooks and do this, note that when we look at a practice problem like this, we don't even really need to know, exactly what we're paying off or who we're paying to. We're just paying something off on account. When we go into QuickBooks, of course, the added information we're going to need is to know who we're paying off so that we can write the proper checks, and we're going to need to know which form to use to record this transaction. So let's see what that would look like within QuickBooks. We're going to go then to QuickBooks. Here we are. And note we're going to be up here in the vendors section. Now there's two things that typically take place in the vendors section. One, we enter bills, and you'll recall that entering the bills, when we enter a bill, will be increasing the accounts payable, increasing typically some kind of expense type of account for whatever we expended the bill for. Then we're going to be paying the bills. That's where we are now, which of course is simply a check generally. However, if you use the pay bills feature, then it'll write a specific check, and it'll tag it as a pay bill type of check, and that'll mean that it'll be decreasing the accounts payable. So normally, oftentimes, of course, we would have a lot of bills that we would then enter. Then when we pay the bills, we would have to select those that we want to pay, check them off in here. In our practice problem, we've entered everything in basically a lump sum. So we've had all the transactions kind of lumped together. So note that we have our one bill amount at the $21,320. Again, in practice, this screen might be used to have multiple bills here that you would then check off and then write the check in this format. So in order to do that, we're going to check off the bill, and then this screen, note, is just basically a check writing screen. What's going to happen is when we run this, it's going to process, in essence, a check form. However, it will reference again that it was a pay bill type check, and that'll give us an indication that what was it, the other account that it's going to, accounts payable. So the date is going to be down here. I'm going to say 01, let's say 2320. So that's going to be January 23rd, 2020. Then the method we can say here, I'm going to say is a check. And then we can either have to be printed, and this would be the indication, or if we were to use this format, we would have pre-printed checks that we would get from the bank. We would put them into the printer, and then we can use this format to print a list of checks, which can be very convenient using this format, because you can then print multiple checks and put the checks into the printer and print them out in that format. Or if we're just going to be writing the checks and we want to enter this into the system, we can then assign the check numbers, which is what we'll do here. We're going to assign the check numbers. It's going to be coming out of the checking account. Therefore, what's going to happen here, we're going to be writing checks when we go to the pay selected bills. In essence, a check will then be generated. That will be decreasing cash, of course, and the other side then will be decreasing the accounts payable. Let's take a look at it. We're going to say pay the selected bill. It says, let me assign the check number, or let QuickBooks assign the check number. I'm going to let QuickBooks assign the check number, and therefore it'll automatically assign that check number. If we were to write the check, then whatever check number is assigned should then line up or match what we're writing in our checkbook, because it should be in numerical sequence and the next number in that sequence. So I'm going to say OK, and then this transaction says that's OK. I'm going to say yes. And there we have it. I'm going to say close this out. Now, normally when I do that, I like to actually go to the register. So that's one place we're going to go and just check that this check has been written. So we're going to go to the banking dropdown. We're going to go to the use register. Then we're in the checking account. That's the one we want. Within the checking account, we're going to go down to the bottom. And there we have our check written to Office Depot. Notice it's a bill payment as opposed to basically a check, just a check type format. However, it's still a check. It's going to be coming out of accounts payable, and there it is. There's the amount. Let's go ahead and look at our trial balance now. So we're going to go to the reports drop down up top. We're going to go to the accounting and taxes and take a look at the trustee trial balance. Within the trial balance, we'll change the dates up top from 01/01/20 to 12/31/20. That's January through December 2020. Let's go ahead and change the font size, or at least I will, so you can see it a little bit more clearly on our side. So we're going to say the fonts. I'm going to change the font size. We're going to change the font size, let's say to 11. So we'll make it 11. Okay, yes, and okay. So we'll see that the checking account is going to be one of the accounts affected. That's our first account. If we double click on that, then we'll be using the auto zoom to go into it. Here's our last check. There's the one we wrote, decreasing the cash account. Notice it is a check. However, unlike the other checks up top, it's labeled as a bill payment check. That will give an indication that we went through the bill payment process, that screen, that data input form, and therefore the other side of this check will typically be going then to accounts payable, as we can see in the split field. If we double click on this check, then it'll show us not the screen that we entered into, but simply a normal check. The check will differ, however, in the bottom of the screen, because it looks a little bit different down here because we used the pay bill feature, but it's just a check format, decreasing cash, the other side then going to accounts payable. If you contrast that to another check, such as this one, you see that the bottom screen has those two tabs, the expense and the items tab. So that's going to be the difference between the two. Closing this back out, the other side then going to accounts payable. That's going to be a liability type of account. So if we scroll down and we take a look at the accounts payable, it's down to 0 now. If I double click on the accounts payable, then there's the 21,320. Closing this back out, these are both balance sheet accounts, so we could see this on a balance sheet. Let's take a look at that. Reports drop down, company and financial. Scroll down to the balance sheet standard, changing the dates up top, or I like to go to the customized reports, change the dates from 01/01/20 to 12/31/20, and say OK. And then I'm going to customize the report again, go to the fonts and numbers. I'll make it a little bit larger here as well at 11. Okay, and yes, and okay. So, of course, the checking account is going to be our first account on the balance sheet. And then the other account is located in the liabilities section. That will be the accounts payable type of account. And notice it's not being shown here in the accounts payable type of account because it's at 0. So it went back down to 0, doesn't show up here. Therefore, that's one reason why you can go to the trial balance as a useful account, because if the trial balance, the accounts payable will be present if there was any activity, even if it's a 0 balance at that point in time.